Ladies and gentlemen, Larry Kudlow is with us, National Economic Council Director. Mr. Kudlow, welcome back to the program. Good to see you, sir.
Thank you, Stuart. Appreciate it.
This is round two of our jobs market discussion. I think that 155 new jobs last month is disappointing. I would have thought it would have been much higher, bearing in mind the tax cut earlier this year. And you say what, sir?
Well, that's a good number. I mean, we had 250,000 last month, which beat everybody's expectations. And we're running, let's see, 206,000 new jobs per month through November in 2018. That's a very big number historically. Wages are rising 3.1%. The unemployment rate is 3.7%. Unemployment rate almost fell. We almost got the unemployment rate to a rounding of 3.6, but not quite. So, yes, still, I think it's a good number.
But look, you've got 4% growth in the second quarter, 3.5% growth in the third quarter, and in the fourth quarter, we're looking at maybe 2.5% growth and only 155,000 new jobs in November. That's a nasty downtrend, and it's not what we were expecting, bearing in mind all that you had said about the tax cuts and what they do for the overall economy.
Well, Stu, I'm going to take the over on your 2.5% forecast. So we'll settle up the bet later on. But I would also say this: the economy is now in a 3% plus trajectory. Since President Trump came in, the 7 quarters, not the first quarter in 2017, he has no power over there, but the 7 quarters, we're running, I believe the number is 3.1%. And it's 3.3% so far for 2018. Look, nobody said we could beat 2. Obama's was, 1 to 2%. We're running now 3+. So that's a pretty big thing. And I might add, we're seeing capital goods were revised higher in the latest GDP report. I think that's solid. I want very much to spend my time making you happy and satisfying your deepest desires. Well, I'm working on that.
Here's how you can do it. Tell me that we're going to get 3% growth next year.
We're going to get 3% growth next year. We're going to get 3%. I mean, I'm saying it. Again, I spend a good part of my day making sure that you are happy and satisfied. But I actually believe we will get 3% growth next year. And I believe the supply side policies, look, what's happening here is the potential to grow is greater. Output is increasing at better than 3%. The inflation rate, with more goods being produced and more efficiently with productivity at 2 now, the inflation rate is actually disinflating down to about 1.5%. Doesn't get much better than that. And that's why you see all these Fed people now saying publicly that we're at neutral and they're not going to have to do perhaps anything after the next meeting later this month. And maybe they won't do anything at that meeting. So it's a pretty darn good combination.
Okay. I have to settle something about that dinner between President Trump and Xi Jinping, and you were there. It was December the 1st, and on that day, as you know, Larry, the senior executive at Huawei was arrested in Canada. Now, there's speculation that President Trump knew about it and that deliberately arrested on that day, and that he's taking a very hard line with China. Now, did he know? Peter Navarro says he didn't know. Who knew? Was it known that we were going to arrest that executive on December the 1st when you sat down to dinner?
President Trump did not know. None of us knew, as a matter of fact.
Period. Nobody knew.
Period. Full stop.
But the Chinese may be taking it the other way, saying, hey, you're having a go at us. And that made the trade negotiations more fraught, shall we say?
Well, I don't know about that. I mean, I think you're talking about a law enforcement action, not a trade reform action. And I could be wrong here, Stu. Time will tell. But, we are in deep discussions with them. I'm sure I'm not privy to the law enforcement action. We're certainly in deep discussions on the trade actions. I really don't think one cancels out the other. I will also say, at least to my way of thinking, China's, the telecom company, Huawei, they violated the sanctions with Iran. Okay, they violated the sanctions. They have been warned, and finally we had to prosecute that. And we thank our Canadian cousins for helping us out. So they have been warned. You can't break American law if you're going to do business in the United States. Now, I just think that's a pure law enforcement matter, which hopefully will be corrected.
Yesterday, as the Dow was tumbling many hundreds of points, down about 800 points, the Wall Street Journal said that the Federal Reserve was going to take a wait-and-see attitude on raising interest rates. Do you think the Fed was responding to pressure from President Trump, who had said, don't raise rates? Were they responding to the market, which was down 800 points? Because that kind of pressure is not supposed to be applied to the Federal Reserve.
Well, I don't think the Fed is responding to that pressure. At least the very senior people at the Fed have told me that they're responding to the data. Now, look, the president has made his views known as an experienced, successful businessman and investor. So he was not happy and felt they were moving rates too high, too fast. I think when this story finally shakes out, the president's view will probably be correct, and there's no need for more tightening by the Federal Reserve. But again, we're not breaking down the wall of independence. The president has said that many times. He's just expressing his view. I think what's interesting is that the very senior people at the Fed are coming round to that view on their own. I mean, they're using that word data dependent. I am fine with that, whatever their ways and means are. There ain't no inflation, and the economy is growing, and we shouldn't stop that growth. So I'm being, simple-minded, straightforward. Jobs are rising. Commodity prices are flat. Oil is down. It's a very good situation. And again, as I spend my time trying to please you, we're in very good shape. We're running 3% plus on a smooth four-quarter basis. It doesn't get any better than that, Stu.
Well, okay.